Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello and welcome to the COB. I'm Nadine Blaney along with Juliet Sally. Juliet, what a difference a day makes when it comes to the equity market.
I mean, we've seen this so many times, haven't we, that once we hit a record high, or at least a record closing high, it does seem that the sellers come in, whether you want to call it technical resistance or whatever is happening with the algorithms. But certainly, of course, President Trump and his tariff warnings again playing havoc, and then we started to see quite a bit of weakness coming through as well in terms of that fresh inflation data from the US souring sentiment somewhat.
Yep, so just a bit of a pause in the rally, although most analysts do say that it still looks pretty bullish out there. I will, though, say that I had the pleasure of hosting the call this afternoon. It was a technical analysis special, and both of my guests say that they do expect to see a pullback here. And one of my guests actually said as much as 10%. So take that. Make of it what you will, but you can check out their comments online if you look at the call.
Yeah, and we should actually bring up how the market is finishing out the closing session. There we go. A picture tells 1,000 words. Down 0.8% there on the CBO 200. And as you mentioned, weakness coming through on the ASX 200, actually set for its worst session since May. So let's get into those. Thematics back in the red, as we mentioned. Miners very much weighing there.
Yeah, so BHP Rio. It's so interesting that this is happening, this dynamic, when we did see Chinese GDP beat, and when we do have a lot talking about that rotation out of some of the high flyers, those growth names, the banks, into some of the resources. And I'll give something away. The double buy on the call today was Rio Tinto. So if you'd like to listen to the stock of the day, you can also find that online.
And on our show in a moment. Anyway, drug duties. President
You're right.
President Trump saying he's likely to impose tariffs on pharmaceuticals as soon as the end of the month. Also on semiconductors, this is we're looking to that 50% tariff on copper as well. So sort of every day a new tariff headline.
Sure is. Now, tomorrow, the big economic data here is jobs. And that's very key, of course, because of what we've heard when it comes to the RBA. I mean, the jobs market has been incredibly resilient, you've got to say, so far, although there are forecasts, including that of the RBA, that we will see unemployment creep up. I don't know the official call for tomorrow.
It's 20,000.
Is it?
That's what CBA has anyway. So we'll see whether, yes, I'm getting a thumbs up from
our guest, who's sitting here
sitting
quietly, trying to, Mark Gardner, MPC, just to give it all away. He's coming up. Let's run you through the sectors. We talked about the miners. Rio, the exception to the rule, it was out. Not only was it a double buy on AusBiz, of course, but it was out with a production report, and it had a new CEO appointed.
Yeah, absolutely. And then these are, I think, the stocks we're looking at rather than the sectors. So we might have skipped over the sectors, but let's have a quick look at what we're seeing in terms of the overall thematics for the session. Newmont, now it was down about 9% on Wall Street following the surprise resignation of the Chief Financial Officer, Karen Ovalman, and a broker note saying that it was a bit cloudy in terms of why she was leaving. Separately, of course, it sold its stake in Greatland Resources and Discovery Silver Corp for a combined $470 million.
Yeah, it's trying to streamline its portfolio. Still sticking in that gold, copper space, Evolution Mining trimming its losses, forecasting significant high margin cash generation in FY26 after delivering a record $2.3 billion in operating mine cash flow.
And South 32 coming under pressure. UBS slashing their target price to $3 from $3.20. They're concerned about Mozambique and, of course, what's happening politically there.
Yeah, well, there's that whole Mosel operation that has a bit of a cloud over it right now. Interesting, though, because yesterday we've got I think it was Citi that came out and said that they don't see it as being a negative. So, broker moves do have the ability to push these companies around. And Lendlease has reversed earlier gains to be down. It has secured a prime site in Sydney's CBD, where it plans to develop a $2.5 billion luxury residential tower. We are very close to 2 Lendlease luxury residential towers here at Barangaroo, and boy, they're pretty special.
Yeah, I think 300 apartments or something. That's what the Fin is saying. Wow. Let's welcome someone who also is in the CBD. Wow.
Wow.
I'm excited by shiny things. Mark Gardner from MPC Markets. Hello. Not such a shiny session on the local market.
No, the worst session since May, which wasn't really that long ago, I suppose. It makes for a good headline anyway. But yeah, I'm a little bit surprised. I'm not really surprised the banks sort of headed lower. A bit surprised with the miners. That was pretty good numbers yesterday. Industrial production particularly was up nearly 7%. Expected only at 5% in China. So there is some green shoots of recovery there. And yeah, look, I agree with the guests from the call today. Rio's a really good buy at the moment. They do benefit from that copper tariff if it stays in place. Could be not gone tomorrow, but they have the second biggest copper mine over in the US. So, and they're looking at a pretty nice price at the moment. They're sort of stabilised. So that pullback, I think, is just, I would say it's fairly temporary because I don't think we've spoken about the miners as much in the last 2 weeks as we have in the last 12 months, to be honest. We've always just been flicking past it and ignoring them because it's been a very downtrodden sector. But I think commodity prices just globally, everything's heading to highs overall. So,
and we had overnight, which I thought was really interesting, Apple investing in MP Materials, which was the same company that the Pentagon, essentially the US Department of Defense, invested in last week. And I knew that was going to send the rare earths miners higher. Are you on that trade at all?
We actually discussed MP Materials, I think either on the call or on the COB a couple of months ago. A couple of clients bought it.
Oh, really? Good for them.
It wasn't an official recommendation of ours, but we were looking for other rare earths, and that came up. I think it's up like 200% plus since then. But yeah, so I thought it was an interesting move. Apple doing it, and I think the Department of Defense is buying into it as well. Yeah. So it's obviously a scramble for critical minerals
and rare earths in the US in particular. So it's that whole security of supply.
And there's still some rare earths operations in Africa as well. So they'll the refining is the really difficult part, and it's the same with copper. The US is actually copper independent, but they're so bad at refining, they send it offshore and then bring it back, which obviously adds to the expense. So I don't necessarily disagree with what Trump's trying to do there with, if they've got the refining set up there, and obviously they're looking at, he's flagged another bill. I mean, I know it's just always a rainstorm of information from him, but there's another 70 billion being flagged for building AI data centres. Sort of got lost in the mist of everything else that he's been announcing. But that's going to be around copper and uranium as well, I would imagine. So, and nuclear power, etc. Because I know they're building that big data centre thing in Texas. I think that takes
There's
advantage.
one in Pennsylvania now as well.
Yeah, but in Texas it would take advantage of the excess natural gas. So, but everywhere else they're going to have to use either SMRs or nuclear. So, for the long term, I would imagine. So, yeah, there's announcements are plenty. It's just a matter of which ones stick and which ones don't.
Well, one of them was on pharma, so we've obviously heard that before, but a little bit more bullish in terms of these tariffs coming on pharma. What does that mean for the big pharma names?
I think there's a little bit of a fly in the ointment with the threats against the pharma because all of the major doctors' associations in the States have pulled together a massive class action to sue not only RFK personally, but the government healthcare departments as well, claiming negligence. And GPT is very good, or the AIs are very good at legal things. So I asked how long that possibly delay them being able to make a decision on that. And could be 6 to 12 months.
But it feels to me, and this is not an overly informed political opinion, that Trump seems to be getting his way when it comes to the US court system.
Yeah, he does. But I mean, but it gets tied up in injunctions, etc. I didn't ask it whether it would win. I just asked how much it could delay it by. And he seems to have a fairly short attention span. So if he gets his way on a whole bunch of other things, he may just sort of forget the farmer. But a lot of them are set up in the US anyway. So I don't really know how much. There's no clarity on how it's going to affect specific things as yet. So hard to tell.
Now, you put your thumb up earlier when I said about 20,000 expected for the job.
21, in fact.
21,000, thank you. That will make a big difference.
Huge.
Considering we never get it right, or nobody ever gets it right.
No one ever gets it right.
So this time last week, we were talking about the RBA meeting and how you had sort of correctly said if people were listening to Michelle Bullock, they maybe wouldn't have been as surprised.
Yeah, I think the same with Jerome Powell. Yeah. Like he said higher for longer how many times?
Yeah.
So, but yeah, I think they'll be closely watching, and you've also got to listen to what she said last meeting. They're going to cut. It's just a matter of when. So, I mean, does 5 weeks make any difference when Trump's like really causing a lot of geopolitical and tariff chaos? And I don't think it's, in the scheme of things, it's not a big deal. If the cuts are coming, I think the inflation numbers last night weren't in the States. I'd be a little bit worried about PPI tonight, given that CPI has jumped. PPI is usually the leader, but because the tariffs happen so quickly. If there's a high number in PPI tonight, they could see bond yields head back up as well.
Yeah, I know that TD Canada Trust revised upward its forecast for PPI tonight in the wake of the inflation read. Look, just bring it back to company specifics. I mentioned off the top how broker moves can often push companies around. I note that Bell Potter has downgraded Technology One to sell, which has been such a market favorite, saying that, look, they just can't see a positive catalyst, not much upside risk to the market's forecast. The company has already beat, it still expects it to beat. My question is, though, is the 3.5-4% fall that we saw in Technology One today a result of that? Or is it just that a lot of people right now might be looking to trim some of their real high growth positions?
I think that's what it is, but I think what you've got to realise with the sell is quite often when I'm on the call, when I'm saying something's a sell, it's not because it's a bad company and not because I don't intend to buy it back at some stage, but sometimes they just get way overvalued. I mean, we've seen, we're a buyer of a completely different company, Drone Shield, weeks ago, sold it, had a great profit, sold it somewhere in the low twos. It's traded $4 today. It's a $3.5 billion market cap for a company that just won 60 million in contracts. Yeah. Massive sell. Doesn't mean it's not going to continue to go up or the future isn't bright for that company, but it's overvalued. So I think that's what Bell Potter's probably saying, is that it's gotten to a point where the risks of it falling far outweigh the opportunity cost of it going higher. And I dare say that if it was to fall back 10 or 15%, they'd be probably looking to buy back in again.
So I think the broader question is, Are you advising your clients to trim some of those big positions in those winners?
Yeah. We were in WiseTech. We're out of WiseTech now. I think that's a bit of an earnings thing as well, just because there's an acquisition. They had a lot of turmoil over the last 6 months, and etc. But yeah, some of the high growth. July is usually a pretty good time to be bullish. I think it's one of the better months actually in the year. The passive flow in the US summer holidays pushes it up. So, but we're starting to, it was sort of the last 2 weeks of July is where we're very much on the sell side at the minute, and heading back to cash, because I think that 10% correction that the two guys on the call today were suggesting, I mean, that's not even halfway back to where we got to in April. So that's not a big deal. But you could see, I think there is quite a few growth names that are getting really carried away with, like economic and like a boom economic cycle style move, when there's still probably 12 months of uncertainty before we have a genuine bull market. And and I think you've just got to take your risk off the table at the time, particularly to have cash, because we had cash in April, and that has set up our year basically. Wow. And if you don't have cash and you're scrambling and selling, or you're stressed at the bottom, it's a lot of opportunity costs. So there's no shame in taking a little bit off the table, particularly if you're getting a great result out of those lows. Some stocks are up 100%. I mean, that's pretty good. It's the sharpest bear market rally, which ended up not being a bear market rally anymore, in history, in 120 years of stock market data. So it's probably pretty reasonable to take some off the table at the moment, because it's never happened before. You're pretty lucky to have got the bounce.
Got there. All right, Mark, thank you as always, Mark Gardner from MPC Markets.
Our stock of the day, in case you hadn't heard, was Rio Tinto. So my guests were David Novak from Wealthwise Education and Thomas Atkinson from FX Evolution.
What I've got highlighted here as well is the most traded zone, which is at 117 for Rio. And that, funnily enough, also marks the 12-month target. I think the 12-month target for most of the people that cover Rio, of course, there are many, they've got it about $118. So currently trading at 110-ish. It's technically cheaper than their 12-month target. Funnily enough, their 12-month target is on the level they've transacted the most on in the last 2 years. And it's trading right on its 5-year forward average. So I wouldn't say it's overpriced. I wouldn't say it's underpriced. But if iron ore starts to pick up, well, we know that these miners can often move pretty quickly. So I like it. It's a buy.
If it closes, not just breaks, but closes above 113 and there's some buying behind it, this can go back to the highs at around 120, 121. I would not be bearish on Rio here. And the other thing is with the GDP numbers that came out yesterday that were reported by China, I wouldn't be surprised if they added more stimulus in the second half, especially in the property sector.
Get into the leaders and laggards in a downbeat day today. Nuix was one of the performers, the better performers today, up 7.5%. Megaport also there. Clarity seems to be there every single day. And quite a bit of buying in some of these uranium players. I noted Boss was moving higher as well. Deep Yellow up almost 5%.
Yeah, not a lot of news driving those moves, which is an interesting dynamic already. We talked about Newmont, which was the worst performer by percentage change. Also, Genesis Metals, Imdex, James Hardie, and NAB is down. So we've got a bit of a broker note coming out on the big four banks. It's from Macquarie saying that the surge in offshore buying of Australian bank stocks could be about to reverse.
All right, having a look at the small end of town, American Rare Earths had a very solid session. Of course, we touched on what is happening there with MP Metals and Apple, so that lifted a lot of rare earth players. We saw Iluka, Linus higher, and America Rare Earths up by some 25%. Peak Minerals up 15%, and MTM Critical Metals up 12%.
Let's see if the falls on the other side were steep. Not quite. Digital X, interesting because this is crypto week. Down by 8.3%. Silver Mines. Well, silver's been going gangbusters. Literally, and so a lot of those silver players have been amongst the best performers, and Avita Medical down 6.6% to $1.70.
All right, we touched on the fact that PPI comes through tonight along with the US Federal Reserve Beige Book, and in terms of PPI, it's expected to increase by about 0.2%, and industrial output may increase by 0.1% for June.
So what is on the docket tomorrow? Well, we already talked about the labor force data for June. So 21,000 jobs could be created. Obviously, many economists have their own numbers, but they're all around that area. And we continue with getting a lot of these quarterlies from the miners in particular. So Genesis, Gold Road, Regis, Santos, Yancoal, all expecting to report production tomorrow.
All right, let's have a look at the worst day in 2 months. As we mentioned, May is not that far away, but down after yesterday's record closing high, the sharpest one-day loss since early May due to the shift in risk sentiment. So off by about 0.8% there on the CBO 200, and I think a similar amount on the ASX 200.
Yep, 0.8%. It's actually just a mirror image on the S&P. We've got NASDAQ E-minis for the S&P 500 and the NASDAQ E-minis all lower. So that's U.S. futures giving us a slight indication of what might happen there when trade gets underway. And just looking to see if there's any sort of breaking news coming out in Europe. No, but we're still talking about Trump setting a 19% tariff on Indonesia. So one of our big neighbors. Look, shares struggling right across the Asian region. We're watching US dollar strength as we continue to see those Fed rate bets, bets for cuts.
Ramp up. I'm just going to save you and talk a little bit more about what happened with Indonesia, because Bloomberg is reporting that Indonesia says, look, it was an extraordinary struggle in those negotiations, but as you say, they have managed to reduce that tariff down from 32 to 19%. So
we'll see.
Trade deal supposedly reached. All right, we will be back with no doubt more commentary from the White House and a lot more action tomorrow morning, 9:45. We'll see you then.